Hi, good afternoon, everyone. Thanks for coming for the second day of Future Matters. We have an exciting panel today, which is Empowering Global South and Currency Flows Through Integrated Digital Ecosystems. I'm Eugene Goh from the Monetary Authority of Singapore, and we have esteemed panelists from all around the globe with us today to share about these structural issues of currency flows. How do we facilitate them through interconnected digital ecosystems? I'll quickly introduce them so we can get to the discussion itself. On my right, we have Ms. Wang Pingling, the first female vice president of TU Bank in Hong Kong. We have Mr. K. Duca, the CEO of the Development Bank of Ghana, who's doing very instrumental work, driving transformation in Ghana itself. We have Mr. Jeremy Tan, the Group CEO of Liquid Group, one of the leading fintechs in payments in Singapore and also around the region. And with Mr. Cyrus Bhathawalla, who is the Chief Administrative Officer. It sounds very official, but he's got a very important job, both in the Asia-Pac region at JP Morgan. So for some context setting for audience, why we chose this topic. Firstly, Global South is a very emerging region, very important region, especially with the current developments this week. The term Global South was coined in 1969, so quite some time ago. But the official UN definition is that Global South encompasses Africa, most of the countries in Asia, the Caribbean, Latin America, and of course, Oceania, other than Australia and New Zealand. So 88% of all the world's population lives in the Global South. So a very significant demographic. Interesting fact is that in 1980, the G7 accounted for 50% of the world's GDP. Not too long ago, but recent statistics from IMF in 2023 shows that about 60% of the global economy comes from the Global South, emerging economies and developing economies. So major changes, structural changes, both in terms of development capability as well as output production. And by 2030, it's estimated that 3 out of the 4 largest economies come from the Global South too. So it's definitely an important region. And more important so that a key driver, a key lifeblood of the Global South is cross-border trade. And cross-border trade through digital economies. So Global South countries are leapfrogging, going straight to digital economies. They're trying to power their own countries and population to be digital first, but also keeping an eye on sustainable developments, women-led businesses. A study by the World Economic Forum shows that over 70% of the new value going to be created in the coming decade will come from digital ecosystems. So we have the topic of digital ecosystems, how we can connect the Global South better, but also some structural issues which we'll cover today on foreign exchange. Why foreign exchange is important? I'll just touch a bit and the gentleman here will explain a bit more. A lot of the Global South efforts to grow and to trade are dampened by forex fluctuations. Last few years, an interesting statistic was that over 23 of Africa's major currencies face historically low, the lowest valuations or devaluations. And this had ramifications not just within the countries but around the continent. It affected imports that were coming in, it affected livelihoods, it affected foreign exchange reserves, which were needed for capacity building assets that a lot of countries needed to grow. So a lot of challenges. And in terms of how the Global North is helping the Global South, I think we often hear of how there are grants, there are loans being provided to help the Global South prosper. But a recent study this year, in 2024, showed that on a net-net basis, the Global South is paying up to 50 billion more back to the Global North instead of receiving benefits and concessions to grow. So it's almost a reverse flow of wealth from the Global South to the Global North. So obviously there are some major issues at play in present. So to get the discussion moving, let's first understand what's happening in the global landscape across these different regions which our esteemed guests are going to share about. And we can start in the African region. Africa has the youngest population, average age about 18 or 19 years old. It has one of the fastest growing regions around the world and potentially the world's breadbasket. But yet it's faced a lot of structural issues going ahead. And I'd like now to turn to Kay, as the CEO of DBG, Development Bank Ghana. He has the unenviable task of driving lots of structural change in Ghana itself and also reaching out to West Africa and international partners. So Kay, maybe just to start things off, given DBG's focus on driving change in Ghana itself and also larger through West Africa, what are the key concerns you've seen? What are the benefits you've seen? And from a maybe currency fluctuation FX perspective, how has that sort of tainted your development drive?
No, thank you, Eugene, and thanks for the invitation. The challenges that you mentioned are very clear, and it's something which we experience, on a really visceral basis. So I think over the last 3 years, currency depreciation in Africa from the IEA is about being 73% depreciation. And from a more personal point of view, since 1960 in my own country, the currency has constantly depreciated from 1960. So that's 60 years of depreciation, which gives you an indication of my age. Right? But these are issues that, we really need to, yes, understand, but realize that they creates opportunities, and I say that advisedly. Right? You mentioned some of the key areas that we have in Africa at the moment, and as a development bank, we really are now looking very much at how we create sustainable prosperity, which in other words is simply profit, and profit for our local businesses and profit for our banks. And the way that we look to achieve that is to really take those challenges and turn adversity, into a benefit. You spoke about the demography of Africa and also in Ghana, where I come from. And it's really at the most productive age in terms of human capital. In Ghana, the average age at the moment is around about 20, 21. In Mali, it's something ridiculous like 15. But what you have is a really digitally savvy population, highly educated, looking at portable skills, which really is allowing us to be able to turn a lot of the issues that you're talking about into really sustainable and strong digital businesses, some of which we're trying to support. And so you also have to look at the fact that even despite all these challenges, Ghana, Africa, the rest of the continent is very much in a sweet spot at the moment, and that's what we believe in. And that sweet spot is the ability to be able to, A, reduce the risk premium, and 2, build scale. And that's the importance of building the digital infrastructure. Clearly, the currency is a problem in terms of providing that digital infrastructure when it's hardware, and that's something we have to recognize. But even on the basis of concessionary inputs, there's now a focus on commercial returns. And you see that in terms of the companies that are coming into Africa at the moment. And you can look at things from 2 different perspectives. Yes, Africa is paying 50 billion more that's going into Africa. But that just indicates to us that the money is somewhere. So follow the money and let's build together, really profitable businesses in Africa. Thank you.
Thank you. Thanks, okay. And I think you really highlighted some key developments. And one key point was digital ecosystems really help the human capital in Africa advance. And I think that segues nicely to what's happening in East Asia for Ms. Wang Pingling. I think looking in the East Asia region, and you cover markets in China, Hong Kong, Macau area, obviously there's a lot of productive capacity, economic powerhouse in your area. But on your end, you're seeing headwinds occurring. trying to find new markets, trying to expand. Could you share a bit from your perspective? What are the opportunities that you currently see now? What kind of challenges do you see? And what is the sort of vision you are seeing moving forward in your area?
Okay, thanks you, Jifa, for having me here. And before giving my points on your questions, I'd like to introduce our bank group, Xiamen International Bank Group. It was established in 1985. Now, currently, the total assets is about 200 billion US dollar. So, nearly 40 years ago, we established in Xiamen Free Zone. So, as the first Sino-foreign joint venture bank in China, in China with rapidly growing Xiamen now holds two commercial banks as subsidiaries in Hong Kong and Macau. They are three banks I work for, and the other bank is Luso International Bank in Macau. Three Bank, I will emphasize the Three Bank because I work for it. So Three Bank was set up by Mr. Tangagi, who is the very famous person in China and Singapore as well as in Southeast Asia. So if you look back to Chinese financial reforms opening up, Xiamen, we can call it XIB, is very, very particular. So Xiamen has been listed in top 200 by the banker in its top 1,000 world banks for many years. With the strategic layout, it covers mainland China, Hong Kong, and Macau. Xiamen serves their global customers for several decades, focused on providing cross-border financial service. For these customers, we have key customer targets, local customers, and foreign-funded enterprises, and going abroad Chinese enterprise and individuals. With the digital trading increasing, like Yuji said, our clients always face the three key challenges. We will call him the first one is the how to find the partner, especially the cross-border trading partner. The second one is to how to make a faraway deal. And the last one, but not the end, is how to collect money in a right way. So as commercial bank groups, mostly SIB, Xiamen International Bank Group, just only plays the role in banking service, a provider to support our global customers to solve their problems in collecting money and cross-border trade financing. But we are not play the role as a priest to help our customer to how to identify the right partner for them. And sometimes we also face the challenges to help us customers to collect the money in a right way, in an efficient way. And that can not help them to make the deal and complete the deal efficiently. That's why.
Okay, thanks for Ping Ling. And to just quickly summarize for the audience, I think there are three structural issues that she noted, and maybe not just unique to TU Bank or Xiamen International. First, how do they find the right cross-border partners, especially in digital ecosystems when you look for business? Second, how do you trust the partner enough to close the deal in the first place? If the guy or buyer or seller wants to say, they want to purchase something or sell something, how can you ensure that really happens? And third, I think, how do you even collect or make payments? And that's not even adding forex fluctuations, how do you hedge against it, and risk management. So I think this brings us a nice segue to Cyrus, who covers APAC region. This is a huge area. Beyond these three problem statements, I think there's much more challenges you've seen under your desk, but also opportunities. I'm sure there's growth in this area also. And of course, JP Morgan recently won a few awards. This week, I think in London, largest FX market player, 7.5 trillion, and of course, best FX bank and a whole load of other accolades. So maybe from JP Morgan's perspective, Cyrus, could share a bit what you've seen, what's the major issues, especially some members of the audience, whether they're FIs or fintechs, need to take note of if they want to enter these markets or support these corridors.
Firstly, thank you for having me. I appreciate it. And actually, something Wang you said resonated there. Collect money in the efficient and right way. Not always are those two things perfectly aligned, and I think that probably summarizes the challenges in the market quite well. In particular, when we talk about things like fragmented and varied regulatory environments, they present challenges like the speed of adapting to new technology, varied global AML standards that drive difference in behavior across the different markets, legacy capital and currency controls, very important, but maybe not yet caught up to some of the other technology in this particular space, and data privacy. So across some of those topics, as an example, many markets in ASEAN, I know in Nigeria and some other sub-Saharan countries, Argentina and other Latin countries, they still don't have a complete regulatory framework to allow fintechs to help to specialize in these cross-border spaces. And so as a result, the pace of change is a little bit slower. Compare and contrast that to somewhere like Singapore, which has established the regulatory licensing and the regulatory framework that supports this kind of innovation without relaxing regulations. I think if you look at currency controls, they introduce quite a bit of operational process to moving money from point A to point B. Again, important activities, but ultimately the way they're executed today probably drives more friction and cost and inefficiency that limits the balance of payments that we're able to actually move at the end of the day. If you look at speed of payments, we vary in different markets from minutes, realistically, to in some cases weeks, and that can be driven by certain markets where they have controls that slow that down to 2 weeks, like Taiwan, or Bangladesh, where you have paper documents called Form Cs, which need to be exchanged between counterparty banks. And it's not all doom and gloom. There is opportunity, but I'll get to that in a moment. I think currency volatility is something we also deal with in our organization, and so obviously that's an opportunity and a challenge to wrestle with. I think unpredictable swings, especially in exotic markets where there's not a great depth of trading partners, you create a level of risk. Add to that the fact that while certain RTP systems, mostly domestic, are 24/7, FX settlement typically is not. And so as a result, things like pre-funding are not particularly scalable solutions. And these are all things that we're addressing through some of our different business initiatives. I think two other things I'd mention, cyber and fraud. It's a topic we don't always talk about related to the controls, which potentially also create some friction. Now, friction's not always a bad thing, of course. There's healthy friction. But as regulators want to protect consumers, hold providers, both banks, but fintechs as well, accountable for things like authorized push payment fraud. We require more innovative solutions that are not just speed bumps, but actually better lock down the front door and the exit door to those payment interactions. All these types of challenges, that they ultimately require more resources to navigate the compliance framework, and it adds friction to what should otherwise be a seamless experience. Harmonizing standards is an incredible buzzword, I get that, but it really does focus on reducing cost and inefficiency. If we want to achieve the G20's 2027 goal of 75% of international payments processed within an hour, we're going to need to address that particular topic. And I think we're seeing that. It's driving an unprecedented amount of collaboration. Look at the work we're doing across something like Project Nexus, for example. And I think what I am personally most excited about is that it's no longer just banks and legacy financial institutions in that conversation. And I'm the guy with the JP Morgan business card. I like that there is other players, new entrants and fintechs that are actually helping move the market forward. And at JP Morgan, I wouldn't be doing my job if I didn't mention the investment we're making in future forward capabilities. Things like our investment in Partior, based here in Singapore, but also JP Morgan Connexus, which is our newly rebranded Onyx business.
Okay. Cyrus, thanks a lot. It's a very comprehensive scan of the region. I think you highlighted, in addition to the opportunities and the direction to move by G20 settlement within an hour, but also other challenges and structures which the fintechs and institution providers out there in the audience could look into. I think cybersecurity is one of these areas. How do you navigate all the different regulatory requirements? But what you also pointed out, which I'd like to pick up, was safe and efficient and legitimate payments. Because there's the alternative of non-legitimate, which is still happening.
Correct.
But that has a huge markup and margins. So between that and safe and efficient payments, I think there's room to play for both the large players, but also for fintechs. And very nicely, we've invited a fintech to the panel too. So Jeremy, of course, being one of the major fintechs in Singapore, looking at payments within Singapore, but also the region. You've had many firsts, some announcements this week also. Perhaps you can share with us on both angles, I think both on the challenges you face as a fintech trying to navigate different countries, different regulations, as Cyrus has raised, but also how do you thrive? What opportunities do you see? And what are new items on your horizon that you're seeing being developed on? Yeah.
Thanks, Eugene. Good to be here. So Cyrus, you covered quite a broad spread in terms of I wouldn't say issues, but the learnings in the Global South.
Opportunities.
And so I would say I can just basically share our experiences as we are going there. I won't call them issues, but they're things that we as a Singapore-based non-bank financial institution found out when we entered to more, say, the Global South markets. I'm not going to single anyone out. But as we entered that, we realized certain things were different. Certain things that have done differently. And what we had to do or to overcome them. So I picked up a couple of things that you mentioned, and I think if I could summarize it from our experience as we're going to the certain countries itself, if I could put it in terms of 3 buckets: technology, liquidity, and data. So you might be surprised, technology, there's such a diverse, varying, I wouldn't say varying, but different levels of standards or different levels of advancement in the Global South. And it's not a blanket statement in terms of, good, bad. Everyone's a little bit different. I was quite mildly surprised that some of them are actually a lot more advanced than the Global North. The adoption of mobile payments, sometimes in a different way, they've achieved the same purpose of fast movement of transactions. It's achieved its purpose. And it works. And yet at the same time, obviously, there will be legacy systems which, with any traditional bank will understand, sometimes it's not that easy to digitalize. So when we enter some of these markets, the varying levels of technology that we have to deal with, that's quite a challenge. Because from a single hub, like in Singapore, we had to do a lot of customizations just to adopt. Some are real-time, some are not. Some have real-time notifications, some are not. So it impacts our SLA, as you say, and how we do our own, I wouldn't say rule book, but our quality assurance to our counterparties. Because, we refuse to adopt the concept of going towards the lowest common denominator. But yet at the same time, sometimes you're also constrained. So technology is something that we realize is different in some of the markets we went to. And the second thing I think it's been covered as well is what we call liquidity. There are a lot of currencies out there. I mean, we're used to the G10 currencies, we're used to the major currencies. I mean, based in Singapore, we're used to very stable, very unexciting currencies. what we deem an exciting day in Singapore is probably another Wednesday in some of these markets. Yeah? So in that sense, it fluctuates, so that the volatility is a little bit scary in terms of, we support a lot of cross-border trade. So when cross-border trade, it's not about instant payment. It's talking about, the 30 days, the 60 days. Some of them is ahead of time. So as people try and how you want to achieve a certain degree of comfort or a certain degree of standardization in terms of how we want to pay your LCs, your standby letters of credits. How do you book your currencies when it's so volatile? And then volatility is one thing, liquidity is another. I think Cyrus, you part about capital controls. And exactly. So there are certain markets with capital controls, and rightfully so, because they have suffered from currency outflows, and they need to, retain certain degree of control from the central banks. But as you also mentioned, with data today, currency controls can be even more granularly applied in different goods and services. So some countries we've seen are trying that, some are still traditional. And the last comment will be data. As we try to move money, we partner international banks. And international banks or international financial systems have quite a high standard. Well, not high standard. There is a standard in terms of data for compliance. Yeah. KYB, KYC, or the new term now, KYT. You need to know exactly what is moving. Mm-hmm. So being able to extract that data, verify it, to put them through the global rails that we use is sometimes a challenge. I think I'll take a pause here, understanding on the timing that we have.
Yeah, no worries. Thanks a lot, Jeremy. I think just giving an overview of the issues. Maybe I just take two quick comments, one from the big guy from JP, and then one from Jeremy on maybe some new initiatives. Just quickly share in a minute you're working on before we turn back to our two other partners here. Yeah.
Yeah. So when we look at the correspondent banking market, which is traditionally quite expensive in some of these countries due to the cost of compliance, we see opportunities with something like JP Morgan Coin, which is just yesterday been rebranded Connexus Digital Payments. That helps address some of the complexities of cross-border payments using the event-driven infrastructure in particular, as well as treasury automation with programmable payments. So what does that mean? Well, we talk about adding data, some of those regulatory constructs, the capital controls themselves. You can actually do compliance on the chain theoretically. This is not necessarily live in anger in every one of these markets, but I think the principle around the 24/7 infrastructure with the US dollar capital depth is probably the most competitive advantage we can think of that actually solves for some of these challenges. And then looking outside of our franchise, one of our investments in Bhathawalla, for example, has created this multi-bank, multi-currency, real-time settlement mechanism, which is doing line-by-line atomic settlement. Now, why does that matter? It's a super technical term. Well, actually, it reduces the settlement risk. Okay. And the settlement risk associated with those particular markets is significantly higher because of the disconnected nature of the clearing system, the varied operating hours, and the diversity of counterparties, especially if you're talking about intermediaries. Finally, I think one thing we don't spend enough time talking about is pre-validation of beneficiary information. Again, very narrow, very technical, but once again, it's one of those simple things that we can address using something like Connexus's link confirm capability, blockchain or otherwise, using a network of partner banks to share that beneficiary information just reduces payment rejections. Why does that matter in these markets? Because the protracted nature of mistaken payments in those markets is significantly different to what you'd experience in, say, the global north. Yeah. So as a result, dealing with those same problems has a magnified benefit.
Yeah. Thanks a lot. And I think that's large infrastructural issues that you can help to address from a blockchain perspective and atomic settlement perspective. I just want to just a quick comment from Jeremy on your end. In addition to these structures, what else you are working on which addresses global south to global south flows? Yeah.
Thank you. So taking off from where I mentioned just now and taking point Cyrus's inputs as well. So when I emphasized there was a data collection issue as well as a liquidity issue. So this is a real example. This is where I will consider, in partnership with fintechs and banks, we are pathfinders, trying to, or actually supporting payments between Africa and China. Yeah. So in this that's where we learned what was the difficulties, and also we came up with interesting solutions. Of course, writing a little bit on MAS initiatives on the financial transparency corridors, but taking ideas from that financial transparency corridor and the concepts of UTC, which Universal Trusted Credentials, to try to address what we would call the data collection issues. So using that between China and Africa, certain big trades that we have been supporting, to use third-party organizations, including ourselves and third-party organizations, as well as banks, to gather what we call trusted credentials of trade. So a bank in Singapore may not be well aware of the landscape in Nairobi or in Kigali or in Accra, but the local banks do. And leveraging on banks to derive, develop, and input information, trusted information into what we call a UTC, to be able to then allay certain of the compliance matters, or regulatory requirements of international global banks. That was one. And then after that, creating what we call a transparent payment zone. Because literally it's pure transparent. We know exactly who's buying what. But more importantly, what are you buying? And that's where we actually deep down into harmonized codes, HS codes, certificate of origin, billing data, bill of data. There's a lot of data that is now being digitalized. You will be surprised. And getting that into a comprehensive BOP and sharing that with the international banks. And I think it was a requirement that became it was a difficulty that became a value add, as you can imagine. And then just a very quick comment on liquidity and currencies. So how we got around with it was just partnering with many banks. Certain banks have certain liquidity at a certain day and a certain amount in certain markets. So in a way, creating what we call, I won't say global, but an open market in a way, a treasury market of different participating banks. And the banks appreciate that as well, because they can, the banks who are best or most liquid at a certain time for a certain currency can participate and gives us the best rate. So in a way, working with the market, no new invention of technology, taking the building blocks that exist, whether it's on data or whether it's on information, and putting together and then supporting the flows that we do today from China and Africa.
Okay. Thanks, Jeremy. So to help the audience, I think it's a hypothesis being formulated here. I think both utilizing blockchains, having atomic settlements to reduce the risk, pre-verification, again, further reduction of risk. How do we have collaborative and hard work to reach out to various banks in each markets? Just because they're exotics, you would probably need to connect individually, but you can work together, I think, among different fintechs and payment providers to facilitate the Global South fund flow, which is now valued around 6.1 trillion based on recent WTO analyses. I will now turn to Kay, because you've heard a lot of good ideas from this gentleman here. In your efforts and driving change in Ghana, what do you think of these suggestions? What are some of the efforts that DBG are also driving on your end?
No, thank you. And, we actually are a lot more aligned and a lot more advanced in terms of our thinking than you would expect. So in terms of the UTC, the Universal Trusted Credentials, those essentially are the same things that we're talking about. Providing the ability for the local business to have a portable credential that can then give you that level of trust that payments will be made, that all these things will happen. And so that's part of what we've been working on under the auspices of the MAS and also the Bank of Ghana. And it's really important, the collaboration between the central banks, because those are the ones that actually drive and set the guidelines so it's not a Wild West. And their support of the UTC for us in Ghana has been massive. We, as a bank, provide the liquidity, as a wholesale provider of liquidity to the banking sector. But even in that respect, we also have now a risk participation. So we have another subsidiary that helps the banks, the fintechs, etc., to provide risk participation to allow them to be able to act more confidently, particularly on the cross-border trades. And then finally, what we're also doing at the same time and bringing it all together is we're building effectively what is the largest database in the country. And the only superpower that development banks have is that everybody talks to us and everybody gives their data. So we have the data from all the government agencies because of our shareholder is largely government. We have all the data from the banks because we provide liquidity, and we have all the data from the local businesses because they want a loan. And so once you have that and you can build that, we can then be able to make real decisions to support the UTC that we're talking about. And so in many ways we're aligned. What we're not doing is actually pushing that alignment so that what we're doing is supporting what you're doing and vice versa, to really make sure that when your clients are looking for a transaction, they have absolute trust. And that's what we're trying to build at the end of the day, absolute trust in your counterparty. Yeah, thank you.
Thanks a lot. Okay. So another new set of concepts and ideas. I think driving ahead, public-private partnership is key. How do we get risk sharing, which is very key, especially for global south markets with higher risk? How do we work on utilizing databases to address understanding your underlying market and then putting that with latest solutions, whether they are blockchains, whether they are trusted corridors. So, Ping Ling, you have a lot of ideas now from all these gentlemen.
Got a lot from you guys. Thank you so much.
So, as the final, maybe sharing from the China perspective and Hong Kong and Macau, how do you view this? How do you see the way forward, both for your organization as well as participation with other stakeholders?
So as a traditional bank and Xiamen International Bank, we have our innovations in our own way. So I would like to share our innovation set. We have do the digitalization, intelligentization, and automation. So we also bring the chat, we call chat SIB, to our customers for users' experience. And we create a smart foreign exchange system for our customers to serve their own on trading and hedging. And we create the one-stop e-station for the e-commerce client to handling their very complicated business online. So we do our more efforts to support our clients to complete their faraway transactions easier. But I do think we are keep going forward to do more cooperation with tour guides to improve our technologies and our service capabilities for our clients. Thank you, Eugene.
Thanks a lot, Ping Ling. So we've run out of time. Just a quick summary for the audience. I think there's a lot of potential in global south to global south flows. It is growing rapidly, I think especially among with the 88% of the global population and countries. These gentlemen here have shared some of the new constructs they're working on, ranging from blockchains, authoritative settlements, pre-validation, trust corridors, portable digital identities, and also utilization of Gen AI to streamline the experience, especially for emerging market clients. Some of the approaches are Web3 based, some are Web2 based, but many opportunities for solution making from all the stakeholders in the audience, either to work with them or together to solve this new opportunity. Otherwise, I'd like to thank everyone. Please put your hands together for their sharing sessions today.